Good evening. My name is Paul Bennett, and I'm a board member of Heritage Ottawa. I would like to extend a warm welcome to participants in our joint Heritage Ottawa and ScotiaMcLeod webinar entitled Tax Benefits When Gifting Securities, Mutual Funds or Life Insurance to Heritage Ottawa. On your screen, you see the outline of tonight's session, and the formal talk will be 30 to 35 minutes. I encourage you to submit your questions or comments in the Q&A box at the bottom of the screen as we go along. We will respond to them at the end of the formal presentation. If there are questions we don't have time to answer, please submit them by email so our speaker can follow up directly with you. It gives me great pleasure to introduce tonight's expert speaker, Douglas Lai. Doug has more than a decade of professional experience in financial planning and wealth management. He has earned several prestigious financial designations, including Chartered Financial Analyst, Certified Financial Planner, and Chartered Investment Manager. Doug has achieved the credential of Fellow of Canadian Securities Institute, is Options and Derivatives licensed, and is Life Insurance licensed. Over to you, Doug.
Thanks so much, Paul. So in terms of today and the discussion of charitable donations, it's a very, very important topic to a lot of people, especially around this time of year, leading into the end of the calendar year. For a lot of the families I deal with, it's again, a common topic that comes up in our meetings. Where I thought it would be useful to start off our discussion today was a higher level overview of just where investments start and how they come about, and then bridging that gap over to how a donation decision can come about and how that actually can impact you as a potential donor if that's something you're considering. So one of the first places that I thought we would begin was really just, when you have savings, when you have funds that you're looking to potentially invest, as an example, one of the first decisions you have to make is what type of actual investment account do you decide on? So you see in front of you, there's just a few accounts listed there that are more commonplace within Canadian families. The first being a non-registered account or plain vanilla account. Just to let you know, that's really what we're going to focus on in large part today. We do have a registered retirement savings plan or RRSP, registered retirement income fund or RIF account, and a tax-free savings account. These are the typical accounts that I would see for a lot of families that I work with from an investment standpoint. Once you've actually determined what account to select and utilize, that's when the secondary decision needs to be made of what type of investments and investment category are you going to choose. So I selected three here where these are called asset classes or asset categories. You have equities, fixed income, and cash. I have highlighted life insurance, which some would consider an asset as well. What's important about these accounts are going to be, basically what happens and what are the implications when you actually put money into these accounts, because there's going to be different benefits or tax implications. What happens while an investment is held inside each of these accounts and, for an extended period. So if you invest in one of these accounts for a few years, 5 years, 10 years, what are the implications? And there are going to be potential implications when you actually withdraw from these accounts as well. So these are just important things to distinguish. And again, I'll bridge the gap with how those impacts can come to fruition when you're making a donation. For some in the room that might be a little bit more in terms of visual learners, I thought I would just give you a rough picture of what I was just speaking about. So this is a bit of a hierarchy in that decision-making process. So again, if you have funds to invest, from top down, you decide, okay, what type of account am I actually going to select? Within that respective account, what category of investment? So again, an equity or fixed income. And I've added one last layer there. And this is a layer that you usually see in the headlines or that you might read about in articles. You can talk about individual shares or stocks, exchange-traded funds, you can have bonds, you can have mutual funds. So these are elements now that I would say are potential publicly traded securities. And that's going to be a key term that you'll see repeated throughout this evening, but just something to keep in mind. So whenever I think of charitable donations and philanthropic giving, one of the items that really comes to mind is a financial plan. And I thought it was important to really just speak about why a financial plan is quite key in this decision-making process, and why it is almost always involved before we talk about donations, the amount, and the potential, again, tax impacts and benefits to my clients, families, or donors. Financial plan, if you haven't gone through that process, I would certainly recommend you go through it, but in a sense, it's just a snapshot of your financial picture today. But then you look outwards, right, over an extended period, 5 years, 10 years over your lifetime. Think of the milestones that you might go through, retirement, things that are important like vacations to you or caring for family. But again, philanthropic giving is going to be a large component and a common component with a lot of the families I deal with. And that's obviously a main purpose of today. A financial plan is usually broken down into 3 stages. So it's just a discovery where you kind of sift out all the information that might be pertinent. You have a presentation where typically I would actually do an analysis and walk my clients through that analysis. And then you would have an implementation after the fact and kind of the action steps and to-do items. So now we'll start to change the gear a little bit towards charitable giving and how that might actually come to fruition. So today we're going to focus on essentially registered charities and those donations or gifts that can be made during someone's lifetime or specifically through an estate. And I know we don't always like talking about estates, but that is a way that charitable giving can actually come about. So one of the key elements when it comes to charitable giving and one of the benefits that you might receive as a donor are that donations often qualify in Canada for a charitable tax credit. And we're going to walk through an example of that. Now, when you're making a donation, there's different methods that you can make a donation. So you can give cash, an outright check, or a cash donation. That term coming about again, publicly traded securities as an option, and life insurance or property, which we might not get to in full detail today, but thought it worth mentioning. So to even further that, again, examples of cash gifts. To speak on that estate side, you can provide charitable gifts through requests, for example, by naming charity as a beneficiary in your will. You can name a charity as a beneficiary on a registered investment account, such as a RIF account, which we talked about earlier. Or again, life insurance, you could name a charitable organization as beneficiary, or you could provide publicly traded securities. Over to you, Paul. Paul, are you on mute perhaps?
Doug has spoken about the financial perspective, and I will now deal a little bit more with Heritage Ottawa's perspective. Those of you unfamiliar with our work may wonder why we need members' donations. Advocacy is our most important endeavor. Examples of our success over the years include the Aberdeen Pavilion, the Billings Estate, the East Block of the Parliament Buildings, the Chateau Laurier, and the Central Experimental Farm. These were no small victories. By contributing to Heritage Ottawa financially, you'll be helping empower the organization to protect our city's heritage buildings, main streets, and urban parks. And you'll be supporting a future where investment in heritage places is seen as the environmentally sustainable development option. Now, why does Canada Helps? We haven't mentioned that much about it so far this evening, but I'll talk about it now. It's a registered charity which makes giving easy for donors and supports 85,000 Canadian charities, including Heritage Ottawa, in raising funds online. They've been doing this since 2000. For donors, Canada Helps is a simple and secure way to give to any registered Canadian charity, including Heritage Ottawa. the focus of tonight's discussion. You can explore different causes, donate, or start your own fundraiser. For charities, they offer easy-to-use fundraising tools and helpful training to support their growth and impact. I've given the website there, and now I'll just show you what that looks like. And their website can be accessed directly or through Heritage Ottawa's. This is the screen which appears should you wish to donate. Before going on to tell you how the process works, I would like to remind you to submit your questions and comments in the Q&A box below and not the chat function. How it works is quite straightforward. Donors will be asked to provide some basic information on the Canada Helps website. The online tool will automatically produce a letter of direction. The donor signs the letter of direction and sends it to their broker or financial institution. The broker or financial institution must act on that direction and transfer the requested number of shares from the donor's investment account to Canada Helps. But Canada Helps does not hold on to the securities and does not pass them on to charities. Instead, it facilitates the sale of the securities, arranges the pledge documentation and materials for donors, issues the tax receipt, and transfers the proceeds of the sale to the charity's bank account if they are registered with Canada Helps. Canada Helps sends the donor a charitable tax receipt for the full market value of the security based on the closing price of the day when the transfer goes into Canada Helps account. Due to fees and market fluctuations, the amount transferred to the charity will likely differ somewhat from the full market value that was assessed when the securities were first transferred. And this doesn't happen for free, however. Canada Helps charges a small non-commercial fee of 2 to 3% to manage the transaction, depending on the donation amount. This amount covers credit card merchant fees, banking and brokerage costs, electronic tax receipting, administrative costs, and other operational expenses. I'm now going to turn things over to Doug to explain the benefits of making these donations through Canada Helps.
Thanks so much, Paul. So in terms of today, as I mentioned, we're focusing on registered charities, Canada Helps being an example of that. And so when you're donating specifically publicly traded securities, and again, I said we're going to focus on what's called a non-registered account. So when you're donating publicly traded securities in a non-registered account, I would highlight two large benefits, or call it main benefits, to you as a donor. So when you invest, typically, you want that investment to grow or appreciate over time. That appreciation is considered what's called a capital gain. Many of you have likely heard that term before. And that again is usually where you have growth and appreciation in your initial investment. And again, we're taking the example of a non-registered account today. When you donate a publicly traded security to a registered charity, there's the potential that you can actually eliminate that capital gain to you, which you would perhaps otherwise have had to pay individually. This secondary tax benefit, okay, is that when you make a donation, you have the ability to claim a charitable tax credit from that tax receipt. And so in a sense, that impacts and lowers potentially your taxable income as well to you as a donor. So that's really two main huge benefits that a lot of people aren't aware of. And I would say that when you're making a donation, it's not as common a method when you think and consider about making a donation, especially ones that might be more sizable in nature. So I really want to walk you through an example because I think it really just shows and highlights the true benefit visually to you as a potential donor for using this method of donation. Okay, so in front of you, you have a few numbers and a few columns here. I'm going to start with asking you to look at the middle column with the bolded header that says sell securities for cash and then donate after tax proceeds. All right. And I'm going to paint a bit of a picture here. So let's again assume you have this non-registered investment account. All right. And with the top line, you can see your original cost of securities is $1,000. So let's pretend you start with $1,000 and you invest in ABC company, right? And you hope that ABC company grows over time. And so the line beneath, you can see the current market value is $5,000. So your initial investment of $1,000 in ABC company has now grown to $5,000, which is great. Now you want to make a donation. So oftentimes what I find is that people initially think, okay, well, why don't I sell my investment and then I'll just donate the cash proceeds to my charity of choice. Well, here's an actual walkthrough of what the implications are of that. So let's take that example where you've sold the investment or ABC company at $5,000. And so what actually happens? Well, that growth or gain, we use that term capital gain, it essentially is a tax implication. And you can see the tax on the capital gains would be $920 in this example, in this fictitious scenario, right? So when you look after taxes and what you're actually giving to the charity, it's not $5,000. You actually end up with $4,080 that you're donating to the respective registered charity. In this case, let's say Canada Helps. Now, you as a donor, you will benefit from a tax credit, and that tax credit in this example is $1,876. So that's still not bad, and that's a wonderful endeavor. Now let's take the example, however, of looking at donating securities. So if you look at that pink box to the right-hand column, all right, very similar in terms of the nature of that example. You start off with $1,000 investment in ABC company. It's grown to $5,000 now. But instead of selling that investment, you say, you know what? I'm actually going to donate ABC company and my $5,000 worth of ABC company to Canada Helps. Well, here's what's interesting. The capital gain is actually completely removed in this example. So you as a donor do not actually have to pay that capital gain any longer. The secondary feature is that your donation amount is now $5,000. So Canada Helps in this example actually receives the full $5,000. And then the third thing that you can probably see in that little blue box there is that your charitable tax credit to you as a donor is now actually $2,300. So the bottom line there, you see two bolded numbers, and that's the ultimate summary where your charity in this case gets an extra $920, and your charitable tax credit to you as a donor in this example is actually $424. Okay, so this is a very, very serious impact, especially when you think of if you're considering larger and larger dollar amounts, or if you imagine this happening year over year. Now, and again, I'll allude to this, but we'll probably have to put a pin in it and we won't get to the nitty gritty, but it is worth mentioning that donations can happen during a lifetime or upon your estate, okay? So with respects to an estate donation, where you name a charity upon your estate, you can name them as a beneficiary on your will, or for example, a beneficiary on your RSP or RIF account. What is going to be worth mentioning is that you can claim a charitable tax credit, and there's a limit to this, but up to actually 100% of your net income in the year that, if you were to pass, or the preceding year as well. So this is a bit of a nuance where it's almost a slightly increased benefit upon an estate event, which you don't get during your lifetime. Right? And over to you, Paul.
Thank you very much, Doug. This Canada Helps is very convenient for the donor. It provides a wide selection of charities. You can donate securities to any of Canada's registered charities through Canada Helps, even multiple charities in one transaction. and it provides a simplified process by handling the sale of securities and issuing a single tax receipt for your donation. Now, obviously, we're concerned tonight with the benefits for Heritage Ottawa. Charities receive the full cash value of the donated securities, allowing for a greater contribution to their mission. And this method that Canada Helps has devised creates a powerful revenue stream for charities such as Heritage Ottawa, as donors can support them in ways they couldn't wish with cash donations alone. Doug.
Thanks, Paul. So we've listed a few takeaway points that I thought were beneficial to summarize from our today's discussion. The first being that I want to round back to is a financial plan. All right. So again, for me, it's a biased opinion, but I strongly recommend a financial plan to essentially every family and client that I deal with, pretty upfront. Philanthropic decisions are usually part of that financial plan because I want to understand how that might impact a client in today versus the future from a tax perspective, or even how it might impact other elements of their financial picture holistically. Okay. With respects to a financial plan, I usually say there's typically three key partners and call it advisors around a lot of the clients that I work with. So there's usually me as a financial planner and portfolio manager. It's often the case where a lot of my clients have an external accountant that they work with specific for tax advice. And then even thirdly, oftentimes we work together with a lawyer. So those are kind of the three advisors that are typically familiar with any of my clients and the families I work with. And I would strongly recommend that you work in conjunction together, right? Because not every financial situation is the same. A lot of cases are unique, and oftentimes you want advice from different layers. So for example, I'm not a tax expert. I don't help specifically with tax filings for clients. And so before making some of these larger decisions that might have a tax impact, even though I'm involved, I might have the accountant chime in to make sure everything looks appropriate. The second point, which again is hopefully a very large takeaway today, is that gifting publicly traded securities can provide some of those tax benefits to you as a donor, while also fulfilling, the endeavor and intentions that you might have to benefit a charity of your choosing, right? And typically, again, we're talking about a registered charity in these cases. So really, really be thoughtful when you're thinking about making those charitable donations that many of you are likely on the call wanting to do, especially again, likely before the calendar year end, and think about the best ways to do that so you get the biggest benefit for yourself while also providing that benefit to the charitable organization, right? And so Paul, if you'd like to finish it off.
Okay, thanks, Doug. Now, moving on from what Doug mentioned, Heritage Ottawa depends on your generosity to undertake its vital work. Where would Ottawa be today if it didn't have the Chateau Laurier in its current state, if it didn't have the Aberdeen Pavilion? It would be a much different place. There are various steps involved in donating and using securities. Canada Helps plays an important role and benefits Heritage Ottawa directly. Now, we're going to open it up for questions at this point. The first one that's come in, are there different tax implications of securities being sold out of an RRSP RIF versus a TFSA?
Yeah, so that's a great question, and thank you for submitting your question there. So with respect, and it's a great question because it does distinguish, one of the first things I spoke about of different types of accounts, right? And so in large part for our discussion today, we're really referring to what's called a non-registered account. With respects to a registered account like an RSP or RIF, you are correct. There would be different tax implications. Number one, if you were to sell or trade a security, but also if you were to try to then donate said security specifically out of an, let's say an RSP or RIF account. So it's something that you have to just be mindful that an RSP or RIF account typically may cause a larger tax implication for anything deemed a withdrawal out of that account. That could actually trigger a tax implication. So you want to be careful here. All right. We might not, I might not get into the weeds of, all the particulars of withdrawing, but it's something that we can loop back after if you'd like to look at your own personal situation. But for today's purposes, we're really focusing on a non-registered account.
Thanks, Doug. Now, another question that submitted to me before tonight's session, am I better off making a larger donation all at once, or annually, or quarterly, or what would you recommend?
Yeah. So, and this is a common question I get for clients as well. I think there's a few elements that come to mind because unfortunately it's not black and white where this applies to everyone and anyone, right? So one element that often comes up is really just the importance of you as a donor and the organization that you're contributing to, right? So often cases for some of my clients, they might prefer to make more of an annual donation than just one donation every 5 years because they want to see that donation bear fruit, and the meaningful impacts in call it more real time of what that donation might actually do for that organization, and the initiative that organization might be able to take on. With respects to the tax benefits from, let's say, a charitable donation tax credit as an example, the amount of benefit again will really come back to your financial plan and determining what your income range is, and income sources, and how any of those potential tax benefits might again impact you in a positive fashion, right? When you think of donating publicly traded securities, one of the biggest benefits that we talked about is not only the donation tax credit that you might be able to claim, but the potential elimination of capital gains that otherwise you might have to pay. For example, if you decided to sell that investment that's appreciated in value before making that contribution, right? So often cases, it might be something where I've looked at with my clients in a certain portfolio, let's say a non-registered account, and focused on investment securities that might have appreciated at a greater value because that you're almost getting more bang for your buck by making a contribution and removing that potential tax liability, whether it be triggered now or in the future. Right? The one thing I'll perhaps just end with that, again, we won't get into the weeds of today, but when you have a spouse or common law partner, there actually is the potential that you can sometimes share these tax credits as well when you're filing. So, I'll leave that for another discussion, or for you to perhaps talk with your accountant about, but there's some benefits there that I've looked at with clients as well.
Thanks, Doug. I'd like to remind viewers that they can certainly enter questions in the Q&A box rather than the chat box. We have plenty of time left this evening for further discussion. What's the typical timeline from initiating a securities transfer to the charity receiving the funds?
Yeah, and so when I look at initiating a donation, so let's just say I have a client that's looking to initiate a donation. Just a friendly reminder on the steps, where oftentimes the registered charity almost has, call it a questionnaire or a form that needs to be filled out. That would include information on the donor, the specific security that's being transferred, and a few other items. And then that form essentially gets submitted, so to speak, to the registered organization. Oftentimes, then they initiate a transfer that could take 1 to 2 weeks on average, let's say, and then that's where once the registered charity receives those publicly traded securities, as an example, they immediately action the items on their end where they sell the security, so that you as a donor will then immediately get a tax receipt with your records of everything that you need for your tax purposes.
Thanks, Doug. A final question, unless more come in. How do donors confirm that a charity can accept securities as a donation? Do all charities do so?
Yeah, so that's not the case, and that's why for today we really focused on what we call registered charities, and often registered charities are the ones that might have the infrastructure to be able to accept publicly traded securities, directly from donors. So usually speaking, a good simple way to check is actually Googling and looking at the charity that you're looking to make a donation for. And a lot of charities are really good at outlining how to make a donation and the different formats and steps in order to make that donation. Oftentimes, to be honest, they even have a point of contact listed that is designated to help facilitate any of these endeavors.
Thank you. There's another question. If it has not been specified in a will, is it possible for the executor to direct the financial institution to donate to a particular charity or?
Yeah, that one is going to be a little bit more complex in nature. And here's a few examples that come to mind. So an executor is typically someone who is appointed to carry out the wishes of a will. So if there is a will, just as an example, that designates, my estate will go to, these four beneficiaries, in full stop, four different individuals. It would likely be hard for an executor to make a decision to override the wishes of that will, to say, you know what, we're actually going to carve out a piece of the pie to, a fifth entity. Let's just say we're going to actually make a charitable donation on behalf of that person who just perhaps passed away, right? So usually a will is pretty concrete and rigid for the executor to follow. There are sometimes leeways that executors might have, but again, it's usually, I would say that one might be case by case, but it's going to be more difficult, or it's not as common that an executor would have, call it free range, to just say, we're going to change the what the will has actually outlined to include a charitable organization, no matter how good the intentions might be. So that's perhaps why it's so important to review your financial plan on a regular basis, which would include those philanthropic goals, or even the estate aspects. And I know estates is sometimes a dark conversation, or it's not the liveliest of conversations, but it is very important, and again, in my biased opinion, when it comes to an overall financial picture, especially long-term in nature.
Thanks, Doug. Rather than repeating some of what you said with regard to the last point you made in your formal presentation, are there specific types of securities that are more advantageous to donate to, or to donate rather than others?
Yeah, so the subset that I would lean on today would be publicly traded investment securities, right? Within that subset, you can think of stocks, which is a very common term that's highlighted in the news or the articles. You could actually potentially donate mutual funds, as an example, exchange traded funds. So these are all different arrangements of investments that can actually appreciate in value, let's say in a non-registered account, and that registered charities might be able to accept, right? So that's where you want appreciation of your investment. From a tax benefit, you might be able to remove that capital gain, assuming you have an appreciation of that investment, and that could come from mutual fund, a stock, exchange traded fund. But then you also want to make sure that over and above you wanting to make a donation, perhaps, that the registered charity is able to accept that donation so that you can fulfill those tax benefits.
So that leads actually to another question, and perhaps you've just answered it. Do instructions on charitable donations from an estate need to be specified in the will or other instruments, i.e. a codicil? So.
Yeah, like I would say the most clear-cut way that I usually work together with my clients and let's say a lawyer is to, think of, okay, is there an intention to make a charitable donation? What's, upon an estate, for example, what's the size of that donation? How do you want to make that donation? And then we would work together with a lawyer to actually arrange that formally in place within a will. So I will say, for example, I can, even last week, it was very unfortunate, but have a client that it was dear to me and I worked with for many, many years, and I worked with her adult daughter as well. And unfortunately, the mother in this case did pass away. She, lived a very, very, lovely age all the way into her 90s. But within her will, it was specified that certain charitable organizations would receive amounts out of to be distributed from the estate that formed, right? And so obviously the daughter was involved as well as not just executor but beneficiary, and so this was all arranged as part of the financial plan and estate plan well prior to the client passing, and it was also very much something that the client intended while they were, of able body, sound mind, to be able to update these documents and sign off formally.
To get to a little bit more of procedure, does Canada Helps send the instruction letter to the broker, or does the client have to do that as the donor?
Yeah, so often cases that I find with registered charities, it's so the client who might work with a broker, if that's what I'm hearing, or an advisor, they would help kind of complete this form, given that the client would know exactly what is the intention of which securities to donate, the amount they might hold, without showing all their financial information. They might just specify, this is, the security that I want to donate. This is how many shares from this account. And then the advisor or broker who manages those investments would then submit that form as per the procedures with, any registered charity, and that registered charity would then, implement that document in that form.
Okay, thank you very much, Doug. That brings us to the end of the questions that have been submitted. For anybody who has further questions, Doug has indicated that he'd be happy to follow up if you submit them to us. I'd like to thank everyone for participating this evening, and particularly our guest, Doug Lai with ScotiaMcLeod. There are two events that are coming up. One event is David Jeans talking about Canada's first official architect. And I would also remind you